You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at MIXLR.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with the option block. Your favorite, at least I hope it's your favorite, bi-weekly source for all things options related. If you can find another bi-weekly options source, by all means, enjoy. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. If you like what you hear, head on out to your platform of choice. Make sure you leave a nice little review there so folks can continue to discover the program. You know, we've been doing this for a long time. New folks continue to discover the show all the time. We like that. We like to continue that, so by all means, if you like what you hear, head on over. If you don't like the Rock Lobster or something else, just don't worry about it. We'll leave that one. We'll leave that one off the table. And, of course, however you listen, live after the fact, hit us up. Questions, comments, insights. We do indeed love to hear from you guys. And joining me on the program. It's a faux program today, listeners. On the program today, we've got, since I maligned him unfairly, let's start off with the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. By way of a little thing called Carmen Line Capital. Mr. G, welcome back to the program, sir.
I got maligned with not even in the intro. Like it was so fast. I had to recover from the shock.
It was an early bit of malignage. You know, that's what happens on Monday. You know, it's just that, you know, it's an early start to the week, early start to the day. You know, you get maligned early, sir. What can I say?
You got to throw it back. I mean, it's not like we don't have plenty to talk about today.
Yeah, there are some things. There are some things popping off here. It's been another week of stuff kicking off here to start the week. And also joining us to talk about some stuff, the guy from that quiet little hamlet known as St. Charles, a.k.a. Uncle Mike, a.k.a. the guy from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well.
Let's talk about some stuff. I'm ready.
All right. With the team ready and some stuff set to talk about, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the program where we talk about what the heck is trading, what is going on, and kind of another weird start to the week. You know, last couple of weeks it's been, you know, will we start off roaring to the upside? Will we start off roaring to the downside? Are we scared about viruses? Are we optimistic for the future? Are we excited about earnings? Are we scared we're all going to die again? It's a back and forth type of thing here. The yo-yo of the market is in full effect these days. And the yo-yo is swinging back up today, listeners. Most of the major indices up firmly. NASDAQ leading the charge, roaring out of the gate up 1.5%, propelled, really. Most likely a little bit of a lift coming from the old Teslas. Just saying this out loud this this stock price, it's just it's hard to say with a straight face. With $755, up $104. So for those paying attention, those playing the home game, we are now $330 north, past the level where Musk said he was going to take it private. Oh, what a deal that would have been at $420 now. So yes, we are almost a full Tesla beyond it. Tesla hovered around 300 to 350 for so long, listeners, and now 750. It's hard to even look at that and not just scratch your chin and say, But that excitement, that euphoria seems to be carrying the broad market. S&P, kind of the Goldilocks, up a mere 0.9%. And the Dow, ever the laggard. All that old world economy, no fun from them. They're only up about 0.2%. Excuse me. No, it isn't up, of course, is our old friend VIX Cash. It's off about a handle, puts it at about 17.90. That actually puts it up from our last show, up about 2/3 of a handle from our last show. We were around 17 and a third or so out there last show. VVIX also kind of unched. So, VIX is kind of staying where it is. Volatility kind of staying where it is. VVIX kind of unched right around a 101. Pretty close to where it was on the last show. And our old friend VXX was at a 1570 coming into showtime. Let's see if it has evolved. 1577 right now. So it's up about almost 0.2 of a point from where it was this time last show. So a lot of things popping off. Of course, we are awaiting here in the U.S. the first, you can't really call them votes because they're not effective votes for a president, but they are a choice to nominate perhaps a potential candidate on the Democratic Party. So in that sense, they are the first kind of quasi-official. They are the kickoff. Iowa caucuses, of course, the kickoff to the 2020 official election season. We, of course, have New Hampshire right after that. And then the whole ball starts rolling, heading on into Super Tuesday and beyond. So we'll see those results later on tonight. Some interesting nuggets coming out of the last-minute polling. But we all know how reliable these, even exit polls, notoriously unreliable. So can't really put a lot of stock in those. But the market's waiting on those, of course, and more news coming out of Asia as well about the coronavirus. So it's kind of a pick your poison type of day. Today the market is deciding it likes the good, tasty upside poison. And that's what we're all enjoying this morning. Mr. Rock Lobster, since I'm unfairly maligned, Joe, I'll let you go first. This is not your kind of market. This is more of an Uncle Mike type of market. What do you make of this just joy and enthusiasm in spite of pandemic fears? Think this is just a post-Super Bowl enthusiasm?
Well, I think people were expecting worse from China opening today. And the fact that I think FXI is somehow up 35 cents, which must be the most amazing amount of market manipulation ever by the Chinese government. You're not allowed to short stocks, and you're not allowed to you can buy all the stocks you want, but you can't short them, and you can't sell more than, 10 million yuan worth of stocks. So I think the Chinese government has got quite a pickle on its hands with this. One thing, so just a couple of things. Here's the tinfoil hat time. Notice how the president who tweets about just about anything has just really not tweeted about this at all, considering. I got a task force, but it's pretty much under the radar. And, to me, when I look at stuff like that, it's, we've quietly cut off flights, I believe now, to China, mainland China. Anybody coming from mainland China has to go through a quarantine. It is easy to turn the airplanes off. And it appears that's what's going on around the world, unless I am mistaken. So I find that it's quietly happening. It's not loudly happening, right? We had the WHO last week. So, if it was loud and Trump wasn't leading it with Twitter, I would see something different. It's also, you have the Palestinian peace, the peace process. Like, they put out that plan, and then you haven't heard much from it after that, even though the PA just totally rejected. So it's almost like when he's more serious about something, he doesn't really tweet about it. So I would say is when you're looking at this, the market has had a relief rally, I think, because somehow China managed the day. But we were up quite a bit more this morning than we are right now. So, I had a little vol back spread on. I actually closed the VXX puts this morning. We didn't get the move up. So I closed the VXX puts this morning. And because in order for, I think, this to be what I would call over, we need lower VIX number. Like VIX at 18, I don't know much has happened. We're kind of quietly giving back the rally slowly but surely. I would agree with TOSAW that if you are if you want somebody that wants to buy stock long term, you put in some orders far below the market and you never know what you could get. I think that there's a lot. I believe there's still a lot like under the sheets that we have not seen. I think the speed at which sovereign governments are shutting off airline flights is significant, and they're not really talking about it too much. So either somebody had a boo-boo in Wuhan, a big one, something got released, maybe and something engineered. I don't know. But it seems to be while the virus is not. It's deadly for some of the people who have gotten it. It's not as deadly as other things, but it sure spreads pretty fast. So I don't know. I still think there's some unanswered questions on all of this, and I haven't seen any answers yet. And usually my impression is the market hates uncertainty. So as long as we could have very volatile swings, but until there's more answers forthcoming, I think we're going to see more of the same. Ball ice. A lot of big swings. VIX, we still haven't hit 20 yet. I think that's significant as well. So there's still, I think the undercurrent to the U.S. rally is still it's pretty strong. But this is certainly, it's an unpredicted fly in the ointment type thing. And no bug, no pun intended, but it hasn't gone away quite yet. And I don't know when it will. It just it hasn't yet, and I don't expect it to this week, to be quite frank. So we'll just see what happens. But I think you'll see more things. I think you'll see mainland China cut off more, and especially with airplane flights, until they get a handle on all this. And that's, I think, I still think it will overshadow quite a bit. And we have Iowa caucuses tomorrow, obviously, but. And then we'll see from there. I'm curious to see what the resident bull has to say about all this.
He's buying. He's buying what you're selling, sir. That's kind of the dynamic here at work on the show. And your buddy, Mr. Trump, he wasn't tweeting about the virus. He was too busy tweeting about the wrong state for the Super Bowl champions. Though I think in his defense, I think if you polled people, I'd say probably half of the people thought these were the Kansas Chiefs and not the Kansas City, Missouri Chiefs. It is when you have the same town, two different states right across from each other. It's kind of a little, I think, easily misunderstood. I think a lot of people out there who are mocking him probably had the same thought. But I digress. Here, let's keep on rolling. Uncle Mike, it is kind of an Uncle Mike type of market today. Everything's up. We've forgotten all of the past fears that made us cower under our beds last week, sir. Everything's bright and cheery again. So what is on your radar in this Uncle Mike type of day?
Everything is awesome. It's just that good of a thing now. I agree with Andrew in that we still have a lot more questions to be answered with everything that's going on with China for the beer virus that's going on. And I think that with the higher VIX, there is opportunities to be had, even for me being the bull. One of the things that I did, and I'm going to talk a little bit about this more in the strategy block, is that I have shifted a little bit more to put spread selling as opposed to call buying. Although, don't get me wrong, I'm doing them both right now. But I think that if you are looking to sell premium and take advantage of higher premiums or getting to sell premium further away from where the underlying is, I'm speaking to the bulls out there, of course, if that's the case, you got to be very careful in that you can get your face ripped off at any point in time with high vol. The old adage of vol's high, it's high for a reason is very true. So at this stage, what I've adjusted to is, what I will be doing going forward, and I kind of started today a little bit with some things, is that I want to be more of a premium seller as opposed to a premium buyer right now, just because of the fact that you're getting some decent premiums for puts that are fairly far out of the money. But once again, with that, don't let these things go in the money, folks. Unless you want to own them for the long term. If that's the case, then you're in a really good spot for selling puts to get into stocks right now. If you know you want to buy stocks anyway, you can get paid some pretty nice money to buy them by selling puts and using that technique to actually get into stocks. But if you're doing vertical put spreads at this point, which is something that I'm doing, then just be very careful. Don't let them go in the money, and understand that this is a very gappy market that we're in right now. Meaning that when we have a primary source of market movement or news coming from a place that is awake when we're asleep, we're going to have a lot of gaps in the marketplace. That's just a simple fact of life. So make sure that if you are selling premium and you're doing it on stocks or ETFs and you're not doing it in the futures world, make sure that you have a far enough distance to feel comfortable of a movement against you to where it's not going to hurt you as bad as not going to hurt you super bad overnight. So make sure that you have that understanding and with where you want to do. Now, in terms of where we are with things in the marketplace, we're roughly 8 points off of the all-time high in SPY, so roughly 80 points away on the S&P 500. So with that, we're 2 to 3% off of our all-time high. We're still ahead on the year right now for the S&P 500. I think the main difference right now than a couple weeks ago is one simple thing, and that's the coronavirus. And when you have something like that, ultimately, I believe this is going to be cured. And it's not, maybe the virus won't be cured, but the problem will be cured at some point. When it's going to happen, I don't know. I have no crystal ball along those lines. But that's what's causing the volatility in the marketplace right now. It's not being caused because company after company is just not making earnings. We're in dire straits as a nation. That's not what's causing this. It's pretty much the coronavirus. So I think that once this is solved or helped, so to speak, then I could see us going back to business as usual or being the bullish market with which we have been in. The other things that are going on, the impeachment trial with the witnesses not going to go on the stand, it really wasn't a big deal before. Now it's really no big deal to the marketplace. And then combine that with the fact that we're still having problems over in the Middle East, as we always do. I know I probably could have said those exact words on this show any time between now and even 50 years ago, for that matter. But we have those things that are going on, and we're still really, really close to all-time highs in this marketplace. So it's because of that I ultimately am still bullish, but I've said on the show many times, long-term bullish, short-term cautious. Folks, please, 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 please be cautious in a market like this to all of my bull crazies out there to kind of modify / steal a term from Mark Longo. And then the final thing with the Super Bowl, maybe this is true at your guys' houses, but I remember when San Francisco took the 20-10 lead, a lot of people that were at my house, they said, this game's over now. We're good. We're going home. Our kids got to get to bed. I'm like, all right, but this game is far from over. And hats off to the Kansas City Chiefs and Andy Reid. They did a heck of a job. Mahomes and the whole gang. Congratulations, Chiefs.
Yes, Andy Reid, a.k.a. Wilford Brimley of Cocoon fame, tearing it up, getting his first Super Bowl victory. And you're right, it wasn't the most rock'em sock'em robots game until kind of the end there when we started seeing some leads changing hands and a little bit of a comeback, which the Chiefs have been known to do on occasion. Out there. Speaking of what things are being done out there, let's see what kind of options volumes being traded on this kind of upside surprise type of day. We're seeing VIX up. I should say VIX doing decent paper today, not a ton, but decent numbers. The ADV obviously has crept up since the last time we chatted. There's been some active days. If you listen to Volatility Views, we broke some of that down for you. The ADV creeping back up close to 500K, right around 489 right now. And today's number is right around 340,000 as of a few minutes ago. SPY closing in on 2 million, about 1.85 million on the tape. The ADV a little bit north of 3, about 3.2 million. The S doing about 761,000 contracts. The ADV a little less than 2x that, at about 1.4 million contracts. The Q is 400K exactly. As of a couple of minutes ago, the ADV closing in on 800K, about 792. And the IWM doing about 181, and the ADV about 370,000. So Russell kind of in that half of its ADV range. You can probably guess what the heck our number one is on the top individual names. The rest of them, though, will be a bit of a mystery for you. Number 10 cost you $1.38 in terms of contracts to break into the top 10 today. That gets you all the way to Luckin Coffee. Another Chinese name that's been on our radar quite a bit of late, and it's at number 10 today, 138,000 contracts. Number 9, Facebook. I don't think there's any crazy bad headlines for Facebook today, but it hasn't been the best run for them. Still at 139,000 contracts. Number 8, good old NEO. Bit of a theme here. 149,000 contracts. Number 7, Gilead, the pharmaceuticals. 165,000 contracts. Number 6, good old Microsoft. $1.72 on the tape. Number 5, Disney. 177. Number 4, Baba. Another name from that coronavirus-affected region. 208,000 contracts. Number 3, AMD. AMD crawling up there. 272,000 contracts. It's pretty robust paper for AMD. Number 2, this would normally be enough to blow the doors off anything else in our list. This is our old friend Apple. Yes, they're actually making money again today, even though people are off a little bit today. And but still, 612,000 contracts on the tape. Some people posing the question, they're one of their major centers for Foxconn for iPhone iPhone creation. Really is kind of smack dab in the center of this whole coronavirus outbreak. So how will that impact iPhone production and things going forward? I haven't really heard a lot of that. We know they're closing their retail stores and things, but they haven't mentioned the manufacturing side too much, and obviously that's an important one, so maybe some folks looking at that. Either way, 612,000 contracts. That would usually be enough for number 1 by an order of magnitude, but not today, listeners. No. It's your old friend, the name you love or love to hate. It's Tesla. 832,000 contracts. It's pretty much the bottom half of our top 10 combined. It's just a ton of paper. Of course, the move is outlandish, so you expect some outlandish options paper as a result. 62% of that on the call side. That's not surprising, given the fact that it's up. Oh, yes, 100 handles. Did I say that earlier in the show? I'm kind of curious. Let's go out to Tesla land and see what the heck is actually trading out there. This is about par for the course. You'd think you're trading right around 700. I don't know, maybe the front month around 700 calls will be the number 1 print. Nah, that's far too predictable, far too banal for Tesla. No. It's the June 2021 560 puts going up for $75 and a quarter, 2,000 times tied to stock. Mr. Rock Lobster, is that what you expected for the number 1 big print in Tesla today, sir?
No, it doesn't surprise me a bit. I think if someone is a Tesla bear, then there might be a lot of reason to get in and buy the puts, because this is the opportunity. It's going to come back to normal at any second right now. So not surprising to me at all.
I think we have Uncle Mike. He's already here. I think we have the Rock Lobster back. Mr. Rock Lobster, are you alive, sir?
I am. Just freaking Skype.
You're sending me some weird cryptic Morse codes. I'm not sure what to make of that. I thought you were trying to say SOS, come help me.
Yeah. Throw me a lifeline. It was just not
the
pleasant.
clam pirates have gotten me.
Yes. They took my clams and they killed me and they slit my throat at the same time. Are people replacing short stock with puts? That's not totally, that's certainly possible, I think. I was actually looking at with a student this morning, like some crazy trades, diagonal put spreads that have a tiny short delta, but the put spread goes away if the stock goes straight up. The margin on it was crazy. A 1 lot margin was like 12 grand or something. So that made it more difficult for 1 lot unless you have portfolio margin. I was looking at something, I don't even know if it's reasonable to be how tradable it is, but the 900,000, 1,100 call fly in Tesla on the Feb 21 cycle was like $3.50. I thought that was kind of reasonable. Like upside calls are insanely expensive. Just take your pick on just about anything. It's total madness. So I think with Tesla up $100, what does that move? That is a 10-15% move. So that's like one day realized move is over 200%, and the options are only a 70%. So, you could probably do delta neutral options on Tesla at a 75 vol and make money. So that's what I'm looking to do. It's just crazy pricing. So I don't know what's going on. I am the law of round numbers person when it comes to crazy stuff like this. And that's why I was looking for like upside around that. And then I'm looking for some kind of reasonable put spread that doesn't cut the margins just less on the downside. So anything can happen. Anything can happen with the stock. The $100 rally today could be gone tomorrow. It could be up another 100 tomorrow. Who knows? So I was just like TOSAW was saying, be careful. I think I didn't see a huge borrow problem in the name. I think all the shorts have pretty much kind of given up. So it's 1, 2, 2. So there is a little bit now. There's about $2.50 to March, which isn't a huge amount considering the stock $780. So it's the short interest is building again. That doesn't mean it won't make it exciting for those people for the shorts. And I would not short this thing, although again, I like the idea of some sort of some kind of high positive gamma trade, hold for 2 or 3 days, and Tesla will probably be anywhere $100 away from where it is today. So, you go under that assumption, and all of a sudden things become much more reasonable in there when you look at it. But the March 20 straddle, just for some fun numbers, the at the money straddle's $140 in March, probably fairly priced, easily fairly priced. Straddle for Feb 14 is $85. So I think if you build trades around expected move like that, you can make some money. But where the stock goes, who knows? I mean, it's crazy town. But I would say that $1,000 looms is a big round number, So that's all I'm going to say with regard to. Now that I found my mute button, I don't feel so.
All it takes is a freaking analyst to up his number and the thing moves $100. I mean, what other stock jumps $100 on an analyst talking it up? We all, what dim view we all take of analysts here. Yet someone's loving this. Obviously, maybe some shorts stampeding for the exits also contributing there. You think they would have been squeezed out earlier, but apparently maybe there's still a few left. Either way, this is a big move here in Tesla land. Let's look really quickly at big moves. We talked about it last week. We used to be big parsers, big analysts. We kind of brought the world's attention to the massive cluster of liquidity and the downside there of Tesla options, the catastrophe puts, the mystery puts. And our friend, the Flow Master, was so accommodating. He built a custom search for us on his thing so we could just, with a push of a button, scan all of the Tesla downside. So let's do that and see what lit it up out there over the past week. By the way, we said last show, the Feb par puts, are still the number one options size position out there in Tesla land, and that is still the case right now. Quite a few of those bad boys open to the tune of about 70,000 out there. That's still the number one position. But in terms of downside prints over the course of the last week, someone putting on 20,000 of the Feb 75 puts for a whopping 3 cents. Now, you think they might be hitting the bid on these, but that's opening. So someone perhaps opening to get their 3 cents 20,000 times. That was on the 29th. Last Wednesday. So there still have been some big prints here in these far out the money puts in February. Who knew? February is now the new Jan, apparently, when it comes to all things Tesla downside. We could keep parsing Tesla for days, and I got a feeling we'll probably come back to it on future shows. But we got to keep on rolling now. Before we do that, let's look really quickly. Actually, we'll get to the earnings in a little bit later on in the show. It is time now for us to parse some other weird and wonderful options paper. Yes, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is the portion of the show where we get weird, we get wild, even weirder and wilder than what Tesla has today. If you remember last show, listeners, we talked about some very weird, very last-minute options paper going up right before expiration. Thought we'd kick these off. Let's not keep them sitting in our hopper too long. Let's pay these off right now. So let's kick these off here, going back all the way to last show, Mr. Rock Lobster. So hopefully your memory can go back that far, if you can find a way to unmute yourself over there. Let's kick these off. We talked about some call paper going up in Mo, a.k.a. Altria Group, a.k.a. the former Philip Morris. Doesn't Altria sound so much more euphemistic than Philip Morris? Either way, they were coming into, I'll leave where the stock is for a minute. Again, that's a bit of a spoiler. We'll go in first on what we talked about last show, which were the Jan 48s. These were the calls expiring on the 31st. These were in the weekly. So expiring on Friday, they went up for 32.1 cents, 9,158 times. This is someone crushing below the bid. As the day went on, more went into the total of about 3,000 more. Total of about 12,000 went up on the day. So it seemed like someone had an axe to grind to really crush the heck out of these Mo calls. And we said, that was obviously, if it was by itself, it was a very risky proposition, probably done against some stock. Either way, though, we wanted to see how this one fared. And it looks like it got a little dicey for this guy on earnings day. The stock took a bit of a lift. At the time, when that print went up the day before, the stock was at about 47.89. It rallied all the way up to 48.26 on earnings day. So this guy was probably sweating a little bit. He was through his 48 strike and getting close to the value of those calls before the stock finally turned around and moved in this guy's favor. And it closed at about 47.5. Looks like a decent chunk of these traded on Friday as well, about 6,000 total. So roughly half of the OI, which is kind of interesting. Prices ranging from about a dime to all the way up to 77 cents. Most of these coming in and hitting the bid, which is also kind of interesting because if this guy was already short a ton of them, why is he crushing the bid again? Is he getting short more on the final day there? It doesn't seem like it, but either way, if he bought these things and he took off half of them at prices all the way up to 77 cents, then he probably did all right. Probably kind of scratched his net premium. Didn't take all of them off, obviously, so he let 6,000 go the way of the dodo. He probably kind of scratched somewhere in that level. If he was trying to harvest more, then you got a little extra premium in his bucket there against his stock, which continued to erode all the way down to 47.5. This is kind of a bit of a weird one, Mr. Rock Lobster, and that's the first print was so aggressive, kind of just crushing the stock on below the bid, or excuse me, the options below the bid. So it's always kind of interesting to see. Either way, interesting stuff. Mr. Rock Lobster, where do you fall? What do you think our friend was doing? You think he actually maybe scooped these for a great buy, which would have been impressive on that first print, and he was dumping them out to try to lock in some money, in which case he only got about half of them off? Do you think it was other paper going up around, trying to do some earnings dance around pinning names, which we do see on earnings times? Do you think he was trying to harvest some more towards the end of the day, sir? I'm
just happy I'm not muting again, because the whole button just went. Skype, all the buttons disappeared. Anyway, I don't see. I guess we have seen strange things. I just don't see how this person bought these options. Like, how do they trade 2 cents below the bid and the customer's not I just don't see how that happens, even in these odd electronic times. So I'm just assuming that, if you're buying these things and they double in price and you don't sell them all, that would be a surprise. If you're selling these things and then the rally fizzled and you have it covered with stock, that makes more sense. So I'm just thinking that, it looks like they're going to go out worthless, and the person is going to take the trader is going to take a bit of a win on this one. That's what it feels like, at least as for first blush right now. Let's say
it does feel that way. It is good to speak to you as well, as opposed to the weird Morse code you were sending me before. All right, let's move on to the next one. This is, as I was corrected on last show by our keen-eared listeners, not Jobble, even though that's how it looks. It's apparently pronounced J-Bill. and apparently it's a tech name out here. Let's see. This is ticker symbol JBL, even though their description says a worldwide manufacturing services company, but we'll leave that aside for now. At the time last show, we saw, again, end of month Jan, this time the 40 puts going up for 32.5 cents, hearkening back to the old days of eighths and teenies. 5,500 times, a total of about 6,500 traded on the day. So these are 40 puts, so obviously we're fixating on that 40 strike. Mr. Rocklopster at the time, I believe, thought this was a guy kind of specking to the downside and just scooping some puts. If that was the case, he got what he wanted because the stock turned towards after when this print went up. The stock was almost exactly $40. It was $39.98, and the stock closed about $1 and change shy of that, $38.89 on expiration. So it moved in his favor pretty dramatically. The weird part about this is, if this was a guy specking, he clearly wanted to. Well, I don't think it was a guy spec. I think it was a guy who wanted to get short, or he wanted to dump some stock, because that's pretty much what ended up happening with this guy, because really no puts traded on Friday, a grand total of 20 traded. So all of these puts went out in the money. So this guy, if he didn't want to get short or dump some stock, that's exactly what he did. So I think it leans towards someone probably had a little bit of stock and decided, hey, if this thing really turns south. It's a weird use case to see very near-term puts with stock. That is kind of weird, which maybe could lean towards the speculative cap. But the fact that these weren't closed out and nothing was really done with them leans against that, unless this guy really wanted to get short pretty aggressively. Mr. Rock Lobster, near-term puts went his way and didn't touch them on expiration. What's your take here on these J-bill put love?
Well, with the stock up $1.50 almost, you would think that they exercise them, assign, sell the bottom, and then it pops, or is this them just trying to buy all the stock back?
Yeah, it's not looking too good for them today. I should mention up to about 40-30 right now. So all that goodness right back off again. That's why you should maybe take them off when you can.
I think that is reasonable for most days. And to be honest, I don't know. You never know what they do behind the scenes. Maybe they had a bid in and they sucked up all the stock on Friday when the market fell apart. They just took their money. That's certainly possible because they thought maybe that was a better alternative than trying to go sell the puts. So I think at least right now they had I'm just going to go with the fact that it looked like a winner. We're going to assume it's a winner, and they were correct. I mean, it was pretty much a triple. But the closing of the trade is, let's just call it. We do not know how they closed it, at least at this point. But let's hopefully they didn't screw up what happened, because it looked like a good one.
Yeah, let's hope they came in and scooped it right around 38.90, and they rode it all the way back up to where it is right now, $1 and change, and they're laughing all the way to the bank. Because otherwise, it just, on the pure options execution side of it, it looks kind of sad. So let's look at the optimistic side instead. Because that kind of size, he probably had another axe to grind out there, and it probably was the stock. All right, let's see. Let's bring it up to today. Let's dial the machine, the Wayback Machine, to today's dial. All the way out to, I'm trying to think, this is one we probably haven't talked about. Actually, we have, because it has Kate Spade in this. This is Tapestry Inc. I knew it has been a little bit, but yes, our old friend Tapestry Inc., ticker symbol TPR. It's a fashion holding company. They own Kate Spade and Coach, a bunch of other stuff in there. Trading today, $26.22, up about 45 cents or nearly 2%. This is the name that a year ago was looking pretty good. It was trading nearly $40. And then instantly, about the next day after, it sold off pretty hard down to 33, and it kind of vacillated around that level for quite some time. Then it sold off again in August, so I'm guessing a couple of earnings cycles were none too favorable to this name, because then it got down to 26 and change, which is pretty much where we find it right now. Somewhere in this, actually, no, it got down lower. I'm sorry, it got down to 19.5 and hit a low of 18.5 in August, so it had a rough run there. Kind of recovered from that, and by the time September rolled around, it was trading about $25 again, and it's kind of been in this range pretty much ever since, about 25 to around 27 and change, and pretty much where you find ourselves right now, 26 and about a quarter. let's see what our Eye of Sauron found on this. Otherwise, not a huge volume day outside of those big names that we're printing in the top 10 here. Let's look. It was Feb 27s going up for $1.15. Lift in the offer. These things were $1 at $1.15. 2,600 times. This was opening over there on the Philly. Worth noting, they decided they liked them, and they came for more to the total of about 6,500, so about 4,000 more going up later on in the day. So a decent size opening upside call love here, Mr. Rock Love. I'm sure someone calls you that, not me. Mr. Rock Lobster. Here for Kate Spade and all these other fashion brands. This is kind of like, this has a bit of a whiff of an old school odd block print to it, does it not? Of someone swinging for the fences here in Tapestry. And if that's the case, they need this thing to happen fast because they're going out to Feb. Mr. Rock Lobster, what's your take on someone gobbling up all the Feb 27s in Tapestry, sir?
You know what? To be honest, you're the first one ever really to call me the Rock of Love. So I don't really.
There you go. A new nickname for you every show.
I think this is one of those. I thought they maybe had a good idea. They probably thought they had a good idea, and then the coronavirus came and messed it up. However, there's time. There's time, and there's earnings. So. There's some possibility for this to happen for sure. Earnings are the 5th, and they're about even. They got a shot. I'll just say these are shot. They're not a lot for calls. And I myself, I like these pullback plays where a stock goes up a lot more, and then the market kind of takes it way down. And to me, I think it's easy for a stock to do what it has already done before, meaning it was at a higher price before. So I like bounce plays like this. Anyway, so that's where the whole I think where the trade sits. But it's certainly it's a reasonable price, and the stock looks like it moves at least a couple of bucks on earnings. In the past, it has. So it does have some good gaps and sell-offs. So it is a reasonable spec on an earnings trade. Let's leave it there. It's a reasonable spec on earnings.
Yeah, got some earnings kick. This thing has proven that it can move on earnings. Usually it's to the downside of late. Maybe this can buck the trend. That's what our friend here is betting. And we'll keep an eye on this. We'll put this back in the to-be-watched category. So we pay off 2, we add 1 in. Give 1 inch, we get more back. You can never clean out this category. It's constantly full, but we like doing it for you guys. So we'll keep an eye on our friend here in Tapestry as we keep on rolling and turn our Eye of Sauron to Uncle Mike and see what he has in store for us. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, you kind of alluded to it at the top of the show, talking about some puts and put spreads and maybe using those as an alternative entry point for getting into some long equities, sir. So have at it, sir. What do you have in store for us, sir?
Well, I kind of want to do a little bit of a hodgepodge today for the strategy block. The first thing that I want to emphasize today is, and I want to talk about 2 things. Number 1, weekend and overnight protection. And then number 2, I want to talk about using higher volatility to get into longer-term plays. So the first thing that I want to talk about, the fact that I'm becoming a little bit more of a premium seller right now than premium buyer due to higher volatility, is weekend and overnight protection. Folks, I cannot emphasize this one enough. The last thing that you want is to wake up one morning and all of a sudden see a put spread that you sold totally in the money. It's not a pleasant feeling. Trust me on that one. I've had it happen, although it hasn't happened in many, 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 many years because I'm so paranoid about overnight and weekend protection. Not to say that it still can't happen, but it's not something you want to experience. So on this, in markets like this, one of the benefits is selling premium. The first part I want to talk about is selling levered premium, such as a put spread, meaning that this is your aggressive trading section of your portfolio, and you want to take advantage of being able to do one of 2 things. One, either getting higher premium on a put spread at levels that you like selling it at than you normally would, or two, being able to get the amount of premium that you typically get, but being able to sell it at a strike price further away from where the current underlying is. So when doing that, what I recommend when we're in higher volatility environments, and number one, the only way that an environment is considered higher volatility is if you believe it's higher volatility. I can say vol's high, Andrew and Mark can say that vol's high, but if you believe that vol's low, then you need to play it as if it's low. Doesn't mean you're going to be right, doesn't mean we're going to be right, but by higher volatility, the reason I'm bringing this up is oftentimes people say, oh, well, if the VIX is closer to 20, then that means it's high. Well, not necessarily. You've heard me tell my story on my show about how when the VIX was at 40, everybody thought it was high, and then it went to 80. So you never know. Now, with that being said, I took a little bit of extra precaution this past weekend. I was short a put spread, and throughout the week, my stop or my line in the sand, so to speak, was when that put spread touched the short strike of the put. Or the short put strike price. Had everything locked in on my trading screen, and everything was all set to go should the market touch that. But over the weekend, it was getting a little bit too close for comfort for me for a weekend risk. And quite frankly, it probably would have been the same too close for comfort if it was an overnight risk. During the day, I'm okay with that. But the reason is that had we gapped, I could have easily gone, and by gap meaning gap down, I would have gone significantly in the money on that short put spread. And so I did not want to take on that risk over a weekend when all the things that we have going on in the world. It doesn't make sense from a risk-reward standpoint. So what I did was I rolled down the put spread going into the weekend. And I paid money to do it. I kept it at the same expiration. Now there's a big debate over should you roll down and out, should you roll down, should you just get out, topic for another day. But what I did, and I've done all and will continue to do all three of those, by the way, depending on the situation. But in this case, I rolled down the put spread to a lower set of strikes to where we would have had to have had a huge gap down over the weekend for my put spread to be in the money. Now, with that, does that mean that it's impossible? No. I took on that risk, but I mitigated a lot by rolling down the put spread, and it cost me money to do it. Now, come Monday morning, I still really hadn't changed my sentiment. I think we're pretty stable at these levels, but I'm just trying to be cautious. So what I did this morning is I rolled the put spread back up to where it was going into the weekend. Now, in doing this, it cost me a dime. And obviously, if God were to tell me that the market's going to go higher, gap slightly higher over the weekend, I wouldn't have done it. But unfortunately, God doesn't give me trading advice directly anyway. And so I think that was money well spent because I was able to rest easier over the weekend, knowing that, yeah, there's a possibility, but the market's going to have to go down. And I'm not using exact numbers just because my compliance does not like me to. But I knew that the market has to go down very significantly for that to be touched. And if that's the case, then there's going to be a lot more buying opportunities come Monday. So that's why I did that. And I was cautious along those lines. And that's something that I'd recommend that you do as well. Maybe make your line in the sand a little bit tighter when it comes to overnight and weekend risk, especially. Now, the second thing that I want to talk about is selling premium or selling puts to get into stocks and how it can be beneficial at this state in this type of market. Now, if there's stocks that you like that maybe you've been following and they're down in value and you're looking to get into those stocks, then by all means, you can sell a put to get into them. We've talked about this on the show many times, to where you can sell the put option, and if the stock goes below the strike price on expiration, you get it put to you, you own the stock, you got paid to buy the stock. Very exciting thing. Only in America can a concept like that do well, or in other countries that trade options. Ha! So with that, that's another thing with which you can do. But the difference between doing that and doing what I'm describing is you're not leveraged when you're doing when you're just selling a put to buy stock. You're looking to hold the stock for a longer period of time. You're not buying on margin. You're looking to have exposure to this stock, for better or for worse, for months and years to come, let's say. So in that case, what I was describing might not necessarily have that much of effect. If we have a gap down over the weekend, oh, cool, it'll come closer to my short put, then maybe I'll get it put to me next week or whatever the case may be. And I'm happy because I want to get into this stock anyway and get paid to do it. So in that instance, it's not quite as important as it is if you are levered, meaning if you know that you're going to take a significant hit to your portfolio if this trade goes against you. Well, number one, you have too much money in that specific trade. But number two, make sure that you manage risk a little bit tighter, even if it is a smaller trade. So that is the strategy block for today. And happy belated Groundhog Day to everybody.
Yes, the best Super Bowl commercial by far was that reprise of Valentine's Day, of Groundhog's Day. A great movie, great little commercial there. That certainly brought a smile to my face. As we keep on rolling into our final segment, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we don't have time for a mail block today. It looks like a lot of you guys have Tesla on the brain. We'll just squeeze a couple of your comments in here really quickly. Jeff Thayer 6 saying, Tesla, don't go up anymore. Laugh out loud. He says, $1 bids I just sold for $4.35. Well, it sounds like you should be a happy guy. You should want it to go up more, Jeff. I don't know what you bought, but you just quadrupled your money, so sounds like things are pretty good. You should be far happier in your tweet than you sound. So sounds like you're on the right side of this $100 move. Mr. Brandt, Mark Brandt, longtime listener, says, Tesla calls are as hot as Shakira last night in Miami. Yeah, some folks like that halftime show, others a little bit more divisive. But either way, I guess it worked for him, and it sounds like Tesla calls are working for him as well. Let's go on out to the earnings front, and let's see what is popping off for the rest of this week. Keep an eye on if you want to get away from coronavirus fears and look at actual hard numbers. Today, we got the Googles, a.k.a. Alphabet, after the bell. Tomorrow, we've got Disney, Sony, Allstate, Ford, a little bit of Chipotle, the former stealth Apple, not so stealthy anymore, and even Snap. Wednesday, we got Merck, Siemens, GM, so you like your automotives. This is the week for you. Spotify as well. Thursday, T-Mobile, Uber. That'll be interesting to see how that one fares. Activision, Blizzard, Fiat, Chrysler, more automotive. Twitter and WWE, they've been having some headlines as well, firing a swath of executives at WWE, the stock getting pummeled. Interesting stuff there. And Friday, some name you may have heard of called the SIBO popping off there as well. They're usually before the bell, as I recall. So let's go back around the horn and see what everyone else is cooking. Let's start in the land of the lobster, whom everyone loves, Mr. Rock Lobster. What is on your radar for the rest of the week until we can gather here together again on Thursday?
Well, three things. Coronavirus. I actually can't watch that. I just hear about it. 3250 SPX. I'm not a technical guy, but it's kind of been bouncing off that and stuck here for the last 3 hours. So I'll just say that's a technical number because the market won't move through it. If we close VIX unchanged into the close today, and maybe the vol futures kind of retrace where they closed on Friday, because again, I think this is all event-driven market. It does feel like the underlying economy is pretty good. So in the market, I think, has been very resilient in the face of what's been going on. We're only down, like 3% or something, barely. So the underlying strength is there. It's just how we get by this, and hopefully this coronavirus thing just goes away. Like, okay, we can solve it, and they come up with some vaccines in a couple months. And I think there will be repercussions down the road. That's my tinfoil hat thing. But as for right now, that is the thing to get past. And then if I didn't say it, Tesla, because now I want to buy some put flies in it because they're cheap, and I think I can. I like the risk reward on them. So anyway, I have nothing in it yet, but as soon as this show's over, I'm going to give it a whirl. So anyway, that's all I got. That's what I got for the week.
Yeah, if you're gonna go play in a crazy high flyer like Tesla, you gotta fly it off in some capacity. Take advantage of what the market's giving you. Don't just go swinging for the fences and buying out of the money calls or out of the money puts, or God forbid selling them just naked. Have a little bit more savvy than that. Unless you're like our friend Jeff there, who clearly is knocking it out of the park, then I guess it's working for him. Mr. Uncle Mike, sir, what is on your radar for the rest of the week until we get back together here on Thursday?
Well, I want to see what happens with this coronavirus and seeing where we are with the S&P. I mean, we're closer to, yes, Andrew had mentioned 3250, but we're also close to the open of the year. So I think that's also a pretty important level as well. So wanting to see where we are with that and continuing to watch. Make sure we don't have any surprises with the impeachment, and also watching these Iowa caucus things tonight. I'm curious to see if they have any effect on the market at all, if the market feels risk of a non-capitalist type getting elected, or if the market doesn't care, the market wants it. Whatever the case may be, watching to see if that has any effect on it at all.
All right, everybody. That music means we've come to the end of this portion of the journey. But don't worry, if you want more, we got more in store for you. So we'll be hitting all that in a little bit. By the way, my producer is reminding me I need to plug the Options Industry Conference coming up in a few months here. April 22nd to 24th. It's going to be at the Wyndham Rio Mar in scenic and sunny and potentially earthquake-swarmy Puerto Rico. So I want to remind you, early bird registration ends February 7th. Now, this is not for the retail folks out there. This is for folks of you know who you are, out there in the business, want to get together with other folks in the business, talk them their options. This is the place for you. I'll be there. We do a lot of our shows from there, a lot of our content from there. Usually they drag me onto a panel or two out there as well. So we shall see. But either way, February 7th, early bird rate goes away. So check it out. Options Industry Conference is the place to go. I think they just have Options Conference now as well with the URL. So you kick the tires and light the... Don't be scared of Puerto Rico. It's going to be a fun time. We're going to head on all out there. So April 22nd to 24th. Check it out, optionsconference.com. Let's go around the horn and see what everybody else is cooking. Let's start with the Rock Lobster, sir. If I'm intrigued, I want to learn coronavirus, maybe how I could fly off in Tesla. Where should I go? What should I do, sir?
You go to optionpit.com. You go to my ball trading club. We haven't made hats yet, but they're going to be cool. Also, and then I think Mark and I are doing a 3-hour educational webinar volatility for all our sharp bets people. That will be Wednesday. And look for an event from us coming in, I would say, early March on volatility and how to trade vol and have a relatively easy to follow system. It requires some work, not a ton of work, but it's something you can follow and actually get your nose in tune to what's going on with vol. So stay tuned for that from us as well.
Trace hours. Well, there you go. Check it out. Sign up for yourself. Sign up for the Vol Club while you're there. Get the schnazzy jacket. Learn the secret handshake. Optionpit.com is the place to go. Mr. Uncle Mike, sir, I don't know if you have a club or jackets, but you got that cool fox I can click on. If I want to go do that, where should I go? What should I do, sir?
stcharleswealth.com. Click on the fox and watch nothing happen. But if you are interested in perhaps having me manage some and or all of your money, whether it's very aggressive or very conservative, this is options. We can do whatever we want. Feel free to contact me. You can find my information at stcharleswealth.com.
There you go. Hit the man up, stcharleswealth.com. One of these days, we'll get him to make his fox do something cool. We'll get his compliance to allow him to make the fox be as awesome as you want it to be. In the meantime, stcharleswealth.com is the place to go. Speaking of meantime, if I said you want more in your ear holes, well, no, just sit back and relax. If you're listening live, we'll pump in some good stuff. You guys like earnings? You like volatility? We got the keeper of all such things joining me on the Advisors Options. We'll pump that in there for you. I'll talk about some pandemic volatility, some good strategies you as an asset manager or perhaps your advisors should know. And if not, we're going to point them to this episode. So that'll be in there over the course of the next hour. We'll be back in pretty much exactly an hour to break down all the crazy volatility and movement and trading and unusual activity in the world of crypto options. So stay tuned for that. Otherwise, we'll see you back here throughout the rest of the week for all of our shows, and then back here for this show in particular on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at MIXLR.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.